is on our radar now. The company reported their numbers, the Q2 numbers. And, this is another quarter running where the company has seen weakness in earnings. Last time they did speak about how both Thailand and India are showcasing some, slowdown in terms of growth. And this time around as well, the revenue saw a decline while the margins also shrunk. Sunil Chodia, the chairman and managing director of Raj Ratan Global Wires, joins us now to discuss their Q2 performance. Mr. Chodia, thanks a lot for joining in. Last quarter when I spoke to you, thank you, sir. When we had a chat last quarter, you had said that there is aggressive competition in the Thailand business. Has that continued in Q2 as well? And what is the outlook for the second half of the year?
Yeah, the competition continued in Thailand, but we have improved on the numbers. We have clocked a higher number of sales. Compared to 7,500 in Q1, we have sold close to 9,500 tons. So there is a growth, substantial growth in the volume, which has also resulted into improved margins in Thailand compared to quarter one. And I think the coming quarters, this will further improve.
What would your entire year's guidance be? I remember the last time you joined us, you said that you would target 40,000 tons in Thailand and about 70,000 tons in India. For the first half, you've done around 16,700 tons in Thailand and 30,000 tons in India. What would you end this year with in terms of volumes?
We have orders in hand for quarter 3 and quarter 4. So we are confident of surpassing number of 40,000 tons volume in Thailand. And we should be close to 70,000 tons in India as well. Yeah.
Okay. Sir, can you highlight what the situation is looking like when it comes to India as well as, say, the export markets in the second half? Because currently we have a lot of geopolitics to reckon with. We have the possibility of higher rates for longer, a global slowdown. In India as well, we are dealing with higher crude prices. So as a whole, do you see this as headwinds to growth at all?
Yeah, we definitely, there are uncertainties because of geopolitical situation. But especially last quarter and the current quarter, we are seeing improvement in demand in Thailand. India remains the same. The Indian tire companies are also under pressure for exports. Those volumes are not growing. So, but when we are looking at sudden demand from some of our customers in Thailand, which reflects that there is a stock pile up now. The earlier piled up stock is over, and they are now again stocking. So we see higher volume of production in Thailand business at least.
Okay. And for India, you gave us the overall numbers for the full year. But for the second half, what are we looking at in terms of the India business? I think this time it was around 15,000 MT that you did in Q2.
Yeah, so I think up till now we have done around 30,000 tons of business. So we'll be doing more than 35,000 tons in second half of this year for India business.
For the India business, more than 35,000 tons in the second half.
Yes.
All right. And you had also said earlier that in India it was a slowdown not only because of lower production from tire companies, but also increased competitiveness in imports from global players. Has that situation worsened compared to what we saw last quarter?
I'll not say worsened, but the competition remains there. Import is still coming. Cheaper import is coming to our country. And one of our competitor has also increased capacity lately. So there is little more supply than the demand from the tire companies, which has put pressure on the margins in Indian business.
So what does that do to your margins in general? Because earlier I remember you would, enjoy about 20% margins in India and roughly 15% in Thailand. Blended would come to around 18 odd percent. Right now, you reported around 16%.
Yeah,
what happens?
Consolidated is 16%, but we have done 18.5% in India, EBITDA margin, and we have improved from almost 2% to 11% in Thailand in margins in Q2.
Okay. Just a quick last question. Your interest costs have risen. So what is your total consolidated debt on books?
Consolidated debt is around 120 crores. 220 crores. and we plan to be doing around that only. There
So has your debt?
I don't see
Yeah.
that growing from there. Yeah.
Okay.
And this
So
debt
your
is
debt-
because of our 300 crore investment in Chennai project.
Okay, so 220 crores consolidated debt currently, and you don't see it rising further from here. But what was your debt last quarter? I mean, has it gone up quarter on quarter?
Yeah, it has gone up. It has gone up because of investment in our Chennai project,
Chennai.
which we are likely to start production end of this year.
Okay, just one final question, because the stock is under a lot of pressure. I mean, as we speak, the stock is down almost 10%. So the street is clearly concerned about 2 straight quarters of weakness that we've seen in the numbers. At what point do you see a complete recovery in your earnings where you can even, sort of get back to double-digit volume growth?
Yeah, according to me, the Q2 has been a quarter of recovery. Where our Thailand business, which had reported a loss, has shown significant profit, significant improvement. There's an improvement in profitability by almost 60%. The net profit compared to quarter one has improved by 60%. And going down the line, it will further improve.
What was your annual guidance for revenue and margins for this year? You've given us the volume guidance. Annual guidance for revenue and margins would be what?
Yeah, because revenue, because prices have come down, revenue will be close to 900, 950 crores. Yeah.
And margins?
Margins, 18% EBITDA margin.
Okay. All right. So we're going to leave it on that
Yeah.
note. Thanks very much for joining in and speaking with us. So